Good morning, everybody. Hey, welcome to Hump Day, Wednesday, October 30th. And one more day to go, today and tomorrow. And hey, October's gone. I want to remind you, though, if you are getting close to retirement, what's close? I'm going to say 5 years. It's definitely getting very close to retirement. Then you need to make sure that you don't have too much risk and you've got the right game plan to create the income you're going to need in retirement. That's what we do here at Statler Financial. Give us a call at 382-0037 to get started with that. Hey, Dave will be with us in just a second. A lot of stuff coming out today. Hang tight.
It's 8:40 here, 20 before 9. Let's check in on the money situation, see how your IRA, your 401k, and like I say, pretty much anything you don't have stuffed in an old sock, it fares one way or the other on the fortunes of Wall Street. Let's head downtown to the offices of Statler Financial Services, where Phillip Statler is standing by. Phillip, good morning. How you doing today?
Hey, good morning, Dave. Welcome to Hump Day. And just think, 2 days left in October, and November will be breathing down us.
Absolutely. I feel it breathing down the back of my neck already. Setting the table from yesterday, it appears the major indexes kind of backed off from record levels by a little bit. It wasn't a resoundingly red day. Dow was down by 19. Standard & Poor's down by 2.5. NASDAQ evidently wasn't tickled pink by being at record levels. They backed off by a little over 49. And I got to believe some of NASDAQ is anticipation of Apple being a little bit of a disappointment when the biggest company in the country reports this afternoon. Would you guess the same?
It could be. I mean, I think there's been a nice little run-up on Apple, so, it could be some profit taking there. Who knows? We'll get the number out later this afternoon. That should be an interesting number to see, how are their iPhone 11 sales going? Some of those things I think are going to be important to Apple as they report tonight.
Yeah, the big thing is going to be guidance, they say, because only about 1 week of the iPhone 11 sales were included in the quarter that they're going to be reporting this afternoon. So everybody's going to be looking at the numbers and then saying, what do they say about guidance? So I suspect their stock is going to kind of go herky-jerky as people read the report, right?
Well, that's probably true. As they dig down to figure out what they anticipate for this fourth quarter, that's probably going to be what people look at the most.
Understood. Macro news come out this morning, the first blush report from the third quarter gross domestic product. And this is one of those things where you and I have one of those conversations before we go on the air. I thought 1.9% was going to be a real big disappointment because that number for growth in the economy in the third quarter, that's almost Obama-esque kind of growth numbers that we were so disappointed in coming out of the recession. But we expected worse, I gather, huh?
Yeah, we really did. They expected, at least on the first analysis, they expected 1.6%. So 1.9 was really a pleasant surprise, though it hasn't really affected the futures a lot. It did right there for a moment, but now as they digested, it started to back off again. So, and remember, folks, this is the first look at the GDP for the third quarter. So, each month or so, we'll get an update and a revision to that as the economic numbers continue to be finalized.
And it just draws the picture that we've had all along, too, that the economy ain't in a recession, but it ain't growing as fast as the government would like to see it grow, which kind of confirms the picture that we've had all along. If it stays anywhere close to 1.9, we'll pretty much feel like prognosticators of the century, right?
Well, that's right. And think of it this way, too. It's not slowing as much as economists thought it was slowing, right? 1.9 is better than 1.6. So we're not slowing as much as the economists at least think we are.
Absolutely. And hey, leveling off after the kind of boom that we had for the last 18 months before this, 1.9 ain't a bad place to level down to. And as you say, it's better than we expected, so we'll go with it. The other number that came out was the monthly ADP jobs report, how many jobs got created in the private sector. I wasn't watching for that. You caught that, 125,000 jobs. Not exactly what the market was hoping for, I gather.
Well, it was in line with what was expected. What they didn't expect was a revision for September. So September came in originally at 135, but it got revised downward to like 93,000 jobs. So that was a pretty substantial downtrend or correction that they put into that for jobs in September. like I said, October came in as expected. We'll have to see what the real jobs number looks like from the government on Friday.
Absolutely. And you might remember back at the beginning of October when we were doing the September jobs report, the ADP number was not an unpleasant surprise. Then the official government number on the first Friday in October came out, and we all went, oh my God, it wasn't what we wanted there. So ADP kind of recorrecting September to be in line with the overall numbers, I gather.
Well, it seems to look that way anyway. I guess more data came in, or they got the right data maybe.
Now, I think the right data might be what we were looking for, because the government report was certainly not a pleasant surprise. It's going to make it interesting when we get our numbers on Friday. It is still earnings season. We talked about Apple coming out afternoon today, but a bunch of companies have come in that we recognize the names of already. What kind of a picture are we drawing so far, Phillip?
So we do have some stocks coming in, earnings coming in. So let's start with General Electric, because General Electric's gotten beat up pretty bad this year, and actually probably the last couple of years. But they really had a good quarter. They beat by about 4 cents a share. Revenue was also ahead of what was forecasted. And here's probably the real kicker for GE. They raised their full year cash flow forecast. So they expect a better forecast, or better cash flow position, which is good when we're talking about a company like GE that just really is struggling to find their place again. And they're trading up this morning, 8.8%. So a nice little tick, but their stock's down below $10. So not the old GE we used to know about.
I noticed them on the top of my big winner list this morning and noted that, holy crud, we're looking at a $9.75 a share stock. That's down to the point where even a modest investor can get a fair number of shares of General Electric now, which is kind of a surprise.
Well, it is, but you need to understand what you're buying, because I don't know that many people really know what is GE anymore. And so that's really the key there before you step in and start buying that stock.
Yeah. Affordable doesn't mean good investment.
Exactly. So, hey, a couple more. Another one that missed on earnings, though, was Yum Brands. Yeah, Yum Brands, they missed by 14 cents a share. Revenue was also low. Their Pizza Hut and KFC, Kentucky Fried Chicken, just really underperformed this last quarter, hurting Yum Brands. They're trading down this morning about 3.5%.
I was wondering what happened to them, because they were toward the top of my big loser list this morning.
Well, this one should maybe come close to that one, and that's Molson Coors. I guess people are not drinking as much beer this summer. They were short by a penny a share. Revenue was short also. They're restructuring, cutting 500 jobs from their manufacturing plants and their overhead. So they are trying to get back to profitability, or they were profitable, but just not as profitable as they thought. They're down 3% this morning.
Ouch. If you can't sell beer, the world is in a real world of hurt, isn't it?
Yeah, it really is. Let's go to one big loser.
Uh-oh.
And this, growing up, was a household name. Tupperware.
You got Tupperware's losing?
Well, they didn't lose money, but they sure did not make near what the analysts thought they should make. They came in about 20 cents short of estimates. Revenue was really short of forecast. The company says they're experiencing some challenging trends in the markets like U.S., China, Canada, Brazil. I'm thinking maybe, Tupperware is not disposable. It's plastic, but you hold on to it. And let's face it, our world's going to a disposable world, and I'm sure that's affecting some of their revenue and stuff. So, and they cut their full year guidance, which is, never a good thing, is it?
Yeah, tell your millennial kids, stop throwing out your leftovers. Use Tupperware, right?
That's right. So they're trading down today over 15.5%.
Really, they used to be one of those adventurous high-tech companies when Tupperware started, but in today's world, thinking about myself, I'll either use a disposable, permanent Pyrex container to put our leftovers in, or use an old margarine tin or something. There's a lot of options against Tupperware that run against the trend, don't they?
Well, that's true. You're absolutely right. So now let's look at a couple of gains, right? Some winners for a change. So we got Garmin. You know, they've come out, the fitness device maker, GPS guys, they beat by about 25 cents a share. Revenue was top the forecast. They saw some better than expected results in a lot of their units, especially in the higher profit margin things. And so they always like that when that happens. They're trading up today almost 7%.
They're in the same league with GE on my winners list this morning. Got
And,
time for one more. Give me another
all right,
winner.
all right. And actually, they'll open at a new high today,
Cool.
52-week high. So the next one is Mattel. You know, we pick on Mattel for the last couple of years having issues. They beat by 10 cents a share. Revenue was just slightly above what was forecasted. And so they're going in and restating some previous years' financials too. But they are incredible today. They're up 21%.
Wow. You
Yeah.
know, that confirms the theory I've had. It's a zero-sum game in the toy game. Remember, Hasbro reported and they had a rough quarter?
Yep.
Zero-sum in the toy business. One goes up, the other seems
It
to
goes
go
down.
It's starting to get predictable. Resetting the table this morning, off day by a little on Wall Street yesterday, but you got to keep in mind, day before we'd set a couple of new records, so it's hard to get too excited about that. 45 minutes before we open up this morning, Phillip, what are we looking at?
Hey, Dave, we made a slight swing positive. We were mixed earlier this morning, but we've actually gone all green right now. The Dow's up $14. I mean, that's not a lot, but A is green. The S&P 500 is up 3, and the Nasdaq's up $20. So all three indexes right now are indicating green. And then we look at the commodity side. We've got kind of a split vote today. Gold's up about a 0.2%. Silver's down about 0.25%, and we got crude oil down 1/3% to $55.37 a barrel. I think that's up from where it was yesterday, if I'm not mistaken.
I think it was by a little bit. Yeah, we got to keep in mind, too, it's probably going to be a little conservative trading day on the equities market because we got a Federal Reserve decision to come out at 2 p.m. this afternoon, don't we?
That's right, we do, and that'll give us more stuff along with Apple to talk about tomorrow.
Absolutely. Worldwide markets, pretty much everybody is modestly in red ink this morning. Asia closed down and Europe is trending downward, not by a monster amount, but still red ink midway through their day. Phillip, advice always needed is to stabilize retirement, make money, and make sure I can retire securely. That takes unbiased advice. How do I get that unbiased advice from you?
Dave, a question. Are those folks out there 5 years out from retirement? Have they had an independent person take a look at the risks they have in their portfolio? Now's the time to do that. Call us at Statler Financial, 382-0037, and then catch us on the radio every weekend, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
All right, get back here tomorrow morning with a look at what the Fed does, what Apple does, and all the rest of the big market movers from today and tomorrow. We'll see you then, sir.
All right, have a great day, and I'll talk to you tomorrow.
Thanks, Phillip. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Folks, remember what I said. If you're 5 years out from retirement or you're already retired, when's the last time you had an independent financial checkup of your current portfolio to make sure you don't have too much risk? Call us. Let us go through that. There's no obligation on your part. Call us at 382-0037. Have a great day. I look forward to speaking to you again tomorrow.